Now we're starting sources of finance. Source of finance deals with the different ways for a household and a business to raise the money it needs, and these are called sources of finance. They're short term, medium, and long term sources. So let's have a look at short term source of finance. This is money that must be repaid within 1 year. Now, examples include, we're going to deal first of all with a bank overdraft. A bank overdraft is permission given by the bank to a current account holder to withdraw more money from the account than is actually in it. That's your definition. Bank overdrafts are used to get small value items that will be used up within 1 year. For example, stock. Advantages of bank overdraft. The interest is paid only on the amount that is actually overdrawn, not on the full amount. No security is needed as overdrafts tend to be small in nature. They are interest bearing, and the interest is tax deductible for businesses only. It is not tax deductible for households. Disadvantages. The rate of interest is expensive. The business and the household must be overdraft free for at least 30 days per year, and the bank will impose additional or extra charges if businesses or households exceeds the overdraft limit. Accrued expenses. Now, these occur when expenses and bills are paid in arrears, such as electricity, gas, and your phone. Advantages of accrued expenses are no interest is charged, no security is needed. However, if businesses and householders are very slow to pay, the service can be cut off. The reason accrued expenses are deemed to be a source of finance is that the business can use the money that is due on those bills before they're paid. Credit cards for business and households. The user pays for the goods and services it wants to buy in a shop with a credit card, usually Visa or Access. Sometimes it's called MasterCard. The shop scans the card and the purchase is recorded on the credit card. The credit card company pays the shop, and the user then pays the credit card company at a later date. Advantages. No interest is charged if the credit card bill is paid in full and on time. And of course it is safer than carrying cash. Disadvantages. If the full amount is not paid, the interest is very high. Annual fees and government taxes make it an expensive form of finance. Now, when we look at factoring, this is very interesting. Now, this is for businesses only, and I would know this because this could come up quite easily in an exam. In other words, outline your understanding of the term factoring as a short-term source of finance. The firm raises money by selling its debtors. The debtors are businesses or people that owe money to the firm. So the firm raises the money by selling its debtors to the bank. The business gets the money now rather than having to wait. The bank usually pays approximately 80% now and the balance later. As the debtors pay, then that money is passed on to the bank by the firm. So the advantages: no security is needed, ownership of the firm is not affected. Disadvantages: it can be expensive as the bank charges a high fee. Can only be used by businesses that sells most of its goods on credit. And lastly then, trade credit. This involves purchasing goods on credit now but paying for them later. The money owed to the suppliers can be used by the business for other matters until it's time to pay, normally or usually between 30 and 60 days. Now remember, trade credit is for businesses only. The advantages are no interest is charged by the supplier, no security is needed, and ownership or control of the business is not affected. Disadvantages: if the credit is exploited, the firm may get a bad reputation and may have to pay in advance in the future. The firm can lose out on discounts for early payments. Now that's the end of the short-term sources of finance.